Jumia, once known as the Amazon of Africa, has struggled with execution issues, accounting concerns, and an unfocused growth strategy in recent years. However, under CEO Francis Dufay, the company has adopted a more disciplined approach by focusing on 5 core countries and concentrating on profitability. Jumia has also seen success in its rural logistics push and fintech layer, Jumia Pay. Despite not yet being transformative, consistent growth across 7 countries strengthens the platform's stickiness and opens up margin expansion opportunities. With narrowing losses, a refined focus, Jumia now presents enough potential to attract increasing attention among investors. Jumia has expanded its logistics service, Jumia Delivery, to Nigeria following successful operations in Côte d'Ivoire. The delivery service aims to provide fast, secure, and cost-effective parcel delivery across the country, with one of the largest delivery fleets and a distribution network covering hundreds of cities. Jumia plans to expand the service to other key markets, including Kenya, Ghana, and Senegal, reinforcing its role as an enabler of Africa's e-commerce ecosystem. Jumia has reduced losses considerably and is on track to achieve profitability by 2027. The company successfully renegotiated logistics contracts, lowering fulfillment expenses per order by 14% year-over-year. Jumia increased its physical goods orders growth guidance to 20 to 25%, indicating strong demand and execution. Moreover, the company expanded its reach beyond major cities, with 58% of total volumes coming from underserved regions. There's also the rollout its in-house logistics platform, Jumia Deliveries, to third-party sellers to enhance cost efficiency and create a scalable logistics business. Yet it should still be noted the overall GMV and revenue are being pressured by currency pressures and a sharp decrease in corporate sales in Egypt. While the average order value for physical goods orders decreased from $46.20 in Q1 2024 to $35.40 in Q1 2025. Revenue for the quarter was down 26% year-over-year, mainly due to lower corporate sales and currency devaluations. Gross profit margin also decreased to 12% from 17% in Q1 2024, impacted by macroeconomic headwinds and reduced corporate sales. Despite cost-cutting measures, Jumia still has ground to cover to achieve profitability, with a projected loss before income tax of $50 to $55 million for 2025. However, the aim is to reach profitability by Q4 2026 through growth and cost management, targeting a doubling of volumes while working on lowering this bar through cost-based improvements. Full-year profitability is expected in 2027. When looking at the disconnect between orders and GMV, particularly in relation to corporate sales, it occurs because corporate sales involve high-value orders that generate significant GMV with few orders. As corporate sales decrease, GMV drops significantly, but the number of orders remains relatively stable. Excluding corporate sales, GMV is up 10%, consistent with a 21% increase in orders. Corporate sales are more volatile, especially in markets like Egypt, due to macroeconomic factors, and there's no forecast of massive volumes of corporate sales going forward. Regarding cash and inventory levels necessary for growth, the CEO Francis Dufay notes that increased working capital for inventory buildup ahead of major commercial events contributed to a significant part of the company's cash burn this quarter. However, they believe that sufficient inventory levels have been built up and anticipate a much lower impact of working capital in the coming quarters. The company has seen a 61% increase in gross items sold by international vendors from Chinese suppliers, leading to an uptick in supply from Asia. This factor may have influenced the raised physical order guidance. Francis Dufay states that now is the right time to expand logistics services as their network is stable and equipped with necessary IT tools for efficient scaling without impacting margins negatively. For more on crypto and stocks, follow Ascencore. Thanks for watching and have a nice day.